It's calmed down a little bit in 2018, but it was so intense in 2017, everything crypto, tokens, whatever. What has been your and your firm's view on this space?
So this is a marathon, not a sprint. So it's very early days in the crypto space. The very basic infrastructure is still being built out from a technology perspective. And from a business model perspective, it's still early days in that companies haven't completely figured out how they're going to make money around projects that are using tokens.
Have you invested in anything yet that's in either what would be called, I guess, the crypto or blockchain space, or at this point it's still too speculative?
So we have invested in over 300 software companies and internet companies that use software at their core, like Twitter and Alibaba. Yeah. In this space, it's still early enough that the companies haven't shifted from the early stage venture to the growth stage when we get more interested. So we're looking for companies where we can be helpful, provide support around technology, architecture, sales.
So your firm comes in a little bit later than where a lot of these companies are so far.
What we are doing, though, is we're looking at our existing portfolio and ways that we can use. For example, we have portfolio companies in cybersecurity and fraud, and how they can apply their existing products to the crypto space or infuse blockchain-like technologies under the covers of their offerings.
Let's talk about some other tech trends. One of the biggest things right now is the anxiety about personal data and privacy and security and things like that. Is that an area where you see opportunity, essentially providing alternatives in some way to the sort of current privacy model of a lot of big consumer tech companies?
Yeah, I think privacy is increasingly becoming as important, if not more important in some ways, than cybersecurity as an existential threat for companies. That is, if they don't have it front and center on how to manage and be responsible stewards of their customers and their partners' privacy, they can be at existential risk. And so we've invested in a lot of cybersecurity software companies, including some that have infused AI in their offerings, and those are great businesses. They're also great for the customers. We're looking for similar types of businesses in the privacy space because we think companies smaller than Facebook will have trouble building their own tech internally.
So it's not just a matter of avoiding a hack, because obviously every company wants to avoid having some big attack or something like that, but figuring out a way that they can companies can communicate to their customers that they can use that service without being exposed in some way.
Exactly. If you think about all of the interesting stuff that people are doing with data today, they want to use it for making their products better, but they want to make sure that it's protected in the same way that they protect their businesses from a cybersecurity perspective. It's a really hard technical problem, and for many companies, they just want to buy software to help them with that. And so we expect there to be an emerging growth stage company ecosystem around that space.
There has been this debate that tech is becoming kind of a monopoly, or that a lot of these companies have de facto monopoly power. You heard Senator Lindsey Graham interview Mark Zuckerberg on this. He said, "Who are your competitors?" And it's raised the question of whether tech startups in general, or whether there's any room for second or third players to go after these incumbents. What's your view on that question?
So what they're noticing is economic power.
Right.
Network effects, demand-side economies of scale around data. So we have more data, so ankle biters have trouble coming in.
Right.
What is a little different from the traditional monopolies is that prices are actually coming down a lot instead of going up. And so they've been getting a little bit more of a pass. But that kind of economic power, it can also be transitory. So people thought that Microsoft was essentially a dominant vendor forever in the 90s, and that changed as well. So the things that can shift economic power are new paradigms around data. One of the things we're noticing is, with the exception of Google, Amazon, and a couple of other large companies, most of the good talent, the longer-term investors, and the really good products are being built in the growth stage companies. They have a longer time horizon, and so once they can get to scale, this is where we're useful. We can help them get to scale, and then they can get that kind of economic power.
Right. Interesting area to watch.